Right, quite a few questions have come through all at once, and um, but first of all, we've got the Fed coming up. So I myself, this is my time. So 2 p.m. New York, um, things are going to get hectic. Leading up to that, um, the market. I mean, you can't say for sure, but typically the market is going to give you two-way price action, um, and it's rather unclear in terms of the way I look at the market is from a trend perspective. I will take the higher time frames conditions, the conditions of the higher time frames as a bias, but lower down, coming down to the 1 hour candle, the 15-minute candles, coming up into the Fed. I mean, it can be consolidative, it can be explosive for whatever reason. People getting out of their positions before the event can cause volatility, and it's very unpredictable. So what I will do is I'll go through the pairs that have been asked. Any other subsequent pairs I'll do in a separate video. But starting with the euro and leaving all fundamentals aside, just looking at the raw price on the chart as per the higher time frames. Looking at the euro, well, I mean, straight away you can see it's just in a coil, isn't it? So we are, if we look at the monthly chart to begin with, and we'll go all the way out to a 4 hour chart to see further back in a window of this size window. So what we can see here is a monthly chart that is breaking down. All right. So the previous month, last month, November, started off in the middle of October's range, but then it dropped. It broke the October low, and we've rebounded to some extent. We've stayed in the lower third of that box, or we're just nestled above it. No, we're still below it. So we're in the lower third of this box, right? The range of last month, and that's bearish. Okay, so long as we stay below the lows of October, then while being inside of November's range, below the lows of October, the monthly breakdown level, MBD, that's bearish. So on the chart, it shows that we're inside of last month, IN. It's a red IN because it's in breakdown. So breakdown, right? So the monthly chart is bearish. The weekly chart, on the other hand, is giving us mixed signals compared to the monthly chart, because the weekly chart, as you can see, we're inside of last week's range. There's the previous week low, the previous week high, the closing price. Okay, we're below the closing price of last week, right? So this week, Monday, we opened inside, and we've just been peaking around the previous week close. So there's the peak formation high. This could be a peak formation low that we're putting in today. No idea if it's going to keep going or if we're going to come up. But at the moment, that's the state of play. So we're inside of last week. But last week, what it did is it broke down the previous week low in a bearish close. It broke the low, but it moved back inside for the bearish close. Bearish in terms of it's lower than the high of the week, but it's actually bullish in the sense that it broke up above the previous week low. So that's a weak fake out low, WFOL. So we've got a bullish weekly chart, even though we're bearish today, right? It's still bullish on the week so far. Until we break back below that low, the WFOL level, right, 104.60-ish, it's bullish. But we're heading down to that level at a fast rate, potentially to treat it as support, perhaps. We don't know, but it might just plummet through, and it could take on the previous week's low. So if we get below the low, then the thesis is that we're going to come down and take out the lows of the week. So it's a very mixed picture overall. Although, having said that, the daily chart is in line with the weekly bearish outlook, right? So we broke the October lows, November, that's bearish. We've stayed below the October lows, so that's bearish on the monthly, and we're also now bearish on the daily. So we're getting some alignment here. We've broken below yesterday's low, so that's a breakdown. That's a breakdown of the daily low. So PDL, previous day low, daily breakdown. So we're breaking down currently. And if we were to break down the WFOL level that we just spoke about, then we're going to have a situation where, although we're inside and we're still inside of yesterday's low and high, right, it will actually turn red, and this will turn to a BD, a breakdown. So then we'll have a table that's fully red, and that would be bearish. So this WFOL level is very important. All right. If we get below it, then we can safely, in some regard, depending on how you manage your risk, set up for a short, but then you're shorting into the previous week's lows. So it's a very tight space. It's not ideal, but you could get something out of it potentially. But it's very tight, right? There's 10 pips thereabouts, less than 10 pips. Now, on the other hand, if we were to break the previous week's low, then that's uber bearish, and we're looking for a continuation all the way down into the previous month's low over here, the November low. All right, so at the moment, my bias is somewhat bearish, but it needs some confirmation, and the confirmation that it desperately needs really is a breakdown of the previous week's fake out low. Okay, so where we piled up. So this is a peak formation low, and we don't really want to sell into that. I'd rather be selling below it, as I've illustrated here. But you've got the previous week low, so you might want to wait. You would want to wait for that to break, pull back, and then continue. So that's the euro. Aussie dollars, someone is asking for. The Australian dollar is in full breakdown by the looks of things, just at a glance. Yeah, so we're in full breakdown across the monthly, weekly, and daily. Now, if we were to... Yeah, so we're in full breakdown. We're below the low of the day, the London low, the Asian low. We've put a new low in for New York. Okay, everything is bearish. So until we break back above Tuesday's lows, which coincide with the closing price, the previous week low, until we get above that resistance, everything is bearish. I mean, we would be bullish on the day if we start breaking the London Asian low, but that is an advanced trade setup that's risky, high risk, as you're trading into what is a well-established bearish trend on the monthly, weekly, and daily time frames. Okay, all heading lower. So I'd rather be looking for shorts on a pump and dump scenario. Okay, so impulse up and then coming down. Okay, I'm being asked about gold. Gold, we already talked about this morning. We talked about it being bearish to the previous day low, at least, and then down to the previous week low. So we've done the previous day low. That target's already been achieved. We broke down out of this coil. Everything was bearish when we broke back below Monday's low. So the trade setup was a short to the previous day low, which has paid off. We're now consolidating in that we've moved back up. So there is a risk that this can continue in a stop hunt of all of that leading into the Fed, Or on the other hand, if it were to roll over and break the previous day low, then we could be looking for a move that's in line with the monthly, weekly, and daily chart into the previous week low.